Digital transformation is no longer just a buzzword, it's a necessity. Countries around the world are creating environments to foster innovation and technological growth. Luxembourg, a dynamic financial hub, is one of the countries taking significant steps forward. In January 2024, the government introduced a new investment tax credit to accelerate digital, ecological, and energy transformations for businesses. This initiative goes beyond a financial incentive. It's a strategic move to drive digital transformation across industries. In this special episode of TechTalk, we are joined by Julie Martin, Senior Manager in Digital Transformation and User Experience Team Leader at PwC Luxembourg, and Davide Visin, Managing Director in Corporate Tax, also at PwC Luxembourg. They share insights into the new tax regime, its potential impact on businesses, and Luxembourg's vision for a digital advanced future. Whether you are a business leader, a tech enthusiast, or simply curious about the future of digital innovation, this episode is for you. I'm your host, Carla Santos, and this is Tech Talk, technology made simple over a cup of coffee. So, grab your favorite beverage and let's dive right in. Hello and welcome to a new episode of Tech Talk, our first for 2025. Today we will explore the investment tax credit. It's a timely topic here in Luxembourg. And I would like to wish a Happy New Year to you, Christopher, and to all our listeners.
Happy New Year to you, Carla, as well, and to all our listeners indeed. I think it's a great topic to get the year started after the holidays. And today to discuss this topic, we have Julie and Davide, so welcome.
Hello, everyone.
Hello, thank you for having us today. We are really happy to start the new year with this topic and discussing with you and for all our audience.
Fantastic.
Perfect. So to get things started, maybe can you tell us a bit more about yourself and why you are here today?
Yeah, sure. So my name is Davide and I'm Managing Director in the Tax Department with a focus on operational companies and alternative investment fund industry. I have around 20 years experience in this field in Luxembourg, assisting companies in tax consulting and tax compliance. In particular, since the draft of this new tax credit law was issued, I have been part of the PwC team dedicated to this topic, and since then, I have been assisting many companies on that.
Thanks, Davide. It's very precise. So my name is Julie Martin, Senior Manager in Consulting Department, and I'm really happy to be there today to help you navigate the complexities of new tax credit law. With a strong background in digital transformation, I have dedicated my career to leveraging technology to drive first efficiency and, of course, innovation in various industries with strong emphasis on customer experience to be sure that it remains at the heart of all digital initiatives.
Perfect. Thank you for these lovely introductions. So let's get started with the basics, actually. What is the investment tax credit for digital transformation and what are the primary goals behind it?
Sure, let me take this. So the investment tax credit is a tax incentive leading to 18% tax credit, which is computed on the investment and related expenses on digital transformation project, and by the way, also on green transition stuff. This amount can be then used to offset part or all the corporate income tax due by the company in a given year. And this tax credit, however, cannot be used to offset the municipal business tax.
Great. So I think it's a great introduction to set the scene. I don't know if you want to add anything, Julie, to that?
Maybe we can discuss about the objectives of this kind of investment tax credit. There are multiple. We can maybe discuss first about promoting innovation. So by providing financial incentives, the new tax credit law encourages business to adopt new technologies and innovative solutions, of course, to enhance their operations and competitiveness, of course. The second one is maybe enhance efficiency. So investments in digital transformation can streamline processes, then reduce, of course, operational costs, and improve overall efficiency within organization, which is a really hot topic. So the third one could be supporting economic growth. So we say that by fostering a more technologically advanced business environment, the new tax credit law aims to stimulate economic growth and, of course, create new job opportunities. The next one is maybe facilitating compliance. This law helps business stay compliant with, of course, evolving regulatory requirements by enabling them to invest in necessary digital tools and systems. And the last one that could be discussed is to encourage sustainability. Digital transformation often includes investments in technologies that support sustainable practices and contributing to environmental goals and, of course, corporate social responsibilities. So I think it's a good overview of the objectives that new tax credit law is promoting.
Yes. There are plenty of benefits.
Yes, indeed. And as you said, I mean, it covers green investments and digital transformation, but today we focus on digital transformation. And I mean, I also work on that field, and it covers a broad topic of technologies, different projects, and so on. So can you maybe clarify a bit what is meant and what kind and type of digital transformation projects are eligible from this ITC?
Yeah, of course, Christopher. And I think to answer to this question, the first thing is to explain again to our audience what it's a digital transformation, to be sure that we are aligned on the background. So for me, digital transformation refers to integration of digital technology into all areas of business, fundamentally changing how you operate and deliver value to customers. So it involves a cultural shift that requires organization to continually challenge the status quo, to experiment and get comfortable with failure, of course. Knowing that, then we can discuss about criteria for eligibility. The first one that could be met is to redefine the entire production process to improve productivity, energy efficiency, or material efficiency. This is the first one. The second one is implement an innovative business model within a company, including in terms of circular economy to create new value for the stakeholders. The third one is to redefine the entire range of services provided to create new values for the stakeholders. The fourth one is to significantly, which is a really important word, transform the organization in order to create new value for the stakeholders. And the last one is, again, significantly redefine the entire processes in order to increase the identification and mitigation of digital risks in the activities. If a company is able to provide at least one of these following objectives, you are eligible for a digital transformation new tax credit law. And we can say that also projects can be implemented anywhere in Europe. It can be a one-year project or multiple for multi-annual projects up to 3 years are also eligible.
Can I ask a follow-up question, and then any of you can answer?
Julie will leave.
Yes.
You want an example?
Yes. Well, like, so if we can get a number of concrete examples, or maybe also on the fees that could be included, is it directly linked to the project? Consulting fees. Voilà. Included in so.
Christopher, calm down. So maybe we can take 2-3 examples of specific digital transformation projects. Maybe we can mention first, because it's a really interesting topic, cloud migration. So moving business operations and data storage to cloud-based platforms to enhance scalability and accessibility. A second example could be also automation of business processes, meaning implementing robotic process automation, RPA, to streamline repetitive tasks and improve efficiency, saving costs. A second one, which is a really interesting topic from my perspective, is the customer experience improvement, meaning developing digital platforms for better customer interaction. For example, implementing a mobile app, chatbots, and of course, online service portals.
Are you satisfied?
I am now.
I think I can add you something more. So there are,
of course,
the cybersecurity transformation project that are definitely in the scope, and this is a clear focus in these years with hackers and be protected by them. So this is clearly an element to consider. And then more broadly, we can say that a change of the core systems of a company end-to-end, let's say, from billing to customer interaction, strategic planning, finance, all of this, a good integration together, it will represent a project meeting at least one of the criteria, yes.
Would proof of concepts then also be as part of the...
If then the proof of concept goes into a live version, yes.
Okay, thanks. Now I'm satisfied.
So you stole my question, but not fully. We still haven't talked about the expenses part of it. Who wants to take this one?
Davide, can I?
Yes, please.
Thanks. Good question. Anyway, maybe let's look at them in simple terms to be sure that it's feasible for our audience without going too much in details and specificities. Maybe first one is depreciable tangible assets. So all investments in hardware and other tangible assets that can be depreciated, excluding buildings, livestock, and mineral and fossil deposits. That's the first one. The second investments are software, of course, and patents. This for leasing or purchasing software and patents can be eligible, but not acquired from a related company. Then we can speak about external services, like PwC, of course. So expenses for consulting and technical support services provided by external providers. As long as these services are not part of the company's regular operations expenses, such as routine tax or legal advice or advertising. We can also include personal expenses for employees directly involved in digital transformation or green transition of the company, of course. And the last one is the training expenses, meaning costs associated with training employees who are directly involved in digital transformation or green transition. So all these investments and expenses are eligible for an 18% tax credit, which of course can reduce the net costs of their project.
Davide, anything to add?
No, I think it's a fair representation of all the investment and the related expenses that that can be included in the scope.
Great. So now that we have a better understanding of what it is, how it works, what type of projects, and then what types of investments and expenses can be included, let's have a look a bit more concretely on how it works without going into the nitty-gritty details. But how can Luxembourg companies benefit from this investment tax credit concretely? Yeah, so a company needs first to file a first application to the ministry describing the overall project that, again, cannot be exceed a period of 3 years, explaining why this project meets the criteria set in the law, as we were discussing before, and include the expected investments and cost
that the company expect then to realize in the following 3 years. That's the first step. Then if this is approved, another application has to be filed on yearly basis to evidence the actual cost incurred during the year in respect to such project. Then the ministry will issue a certificate, hopefully, confirming that the amount of tax credit that needs to be reported in the annual corporate income tax return is actually the one that you applied for. That's the process.
Perfect. Thank you, Davide. And what are the key tax benefits that companies can expect from this new regime?
But I think that if we put things in perspective, an example may talk more than 100 words. Let's say your company does an investment plus expenses qualifying for this new regime for 5 million euro. This gives 900,000 of tax credit. If your company does a net profit of 5 million that year, your tax credit can almost fully offset your corporate income tax, and you will only pay the municipal tax. If you cannot use the tax credit because maybe your profit is lower that year, then the exceeding portion of the tax credit can be used in the following 10 years. So it can be carried forward. So in a nutshell, the company gets a deduction for the cost incurred in respect to the project. On top of that, it gets a tax credit, and the new project should generate more revenue in the future. So really, this is a unique opportunity for the companies to grow.
Indeed, that sounds very enticing for companies. I think they can really benefit from this. And how do these benefits compare to existing tax incentives in Luxembourg?
Good question. So other tax incentives are more limited and more specific to categories of expenses. Give you an example. Hiring of unemployed workers, it's very, very specific. Or some other incentives linked to deferring the taxation, like accelerated depreciation of assets. So here we are going much beyond these incentives, and it is something more comparable to capital grants, for which, however, the process to get is more complex and the amount of the grants is generally lower and more discretionary, I would say.
Very clear. And I have an unlisted question.
Oh.
How can we maximize these benefits?
Julie, you want to take this?
Yeah, of course. Thanks. And it's, again, a good question. And I think companies can take several strategic steps to maximize the tax benefits under Luxembourgish law. The first one could be plan ahead, please. Identify and plan eligible projects early in the year. This includes investment in digital technologies, energy-efficient systems, and sustainable practices. And, of course, ensure these projects align with the criteria for digital transformation and ecological transition. Then, leverage external expertise. So, utilize external consulting and technical services support to enhance your projects. These expenses are eligible anyway for tax credits, so use it. The third recommendation we could give to our audience is to invest in training, of course. So please allocate resources for training to employees involved in digital and green projects. Of course, training are eligible for tax credits and helps build a skilled workforce to drive transformation and, of course, for your future. Document everything. Documentation is the key. So please maintain thorough documentation of all eligible investments and expenses. So this includes, of course, invoices, contracts, proof of payment, of course. So it's crucial for compliance and, of course, maximizing tax credits. Maybe two more. So applying for eligibility attestation. So before making investment, maybe fill in an application for the eligibility attestation, just to be sure that your projects are recognized as eligible for tax benefits. And the last one is compliance. So obtain an annual compliance certificate to maintain eligibility for the tax credits. This certificate verifies that all your projects continue to meet the necessary criteria.
Maybe a follow-up question on that also to understand how to maximize the benefit. And I think you touched upon it slightly in the beginning. But if I'm part of a group, but also with an entity in Luxembourg, our expenses, I mean, if the project covers also Europe and so on, can these be covered in the ITC as well? If I'm doing digital transformation for the entire group?
Yes, you can centralize in Luxembourg all the cost and investments for the project, and then you will basically recharge some services for accessing, for example, your new platform that you developed to your subsidiaries or group related entities. Of course, all these services need to be charged on the basis of the arm's length principle.
Okay, great. Thanks. I think it clarifies this point as well, so thank you for that. Then a follow the next question, and on to the next question. I assume there's quite a lot of challenges as well for the companies. I mean, you mentioned that you already discussed this topic and helped a number of companies to go through the ITC process. So can you maybe explain some of the common challenges that you see from the companies that you've assisted in that, in applying for the ITC? Yeah?
Of course, companies applying for investment tax credits can be a complex process, and we saw a lot of companies facing several common challenges. Of course, understanding eligibility criteria is not an easy process. The next one we saw on the market, that's documentation and compliance. So meaning maintaining thorough and accurate documentation is crucial, and it can be time-consuming and challenging, of course. Also navigating in regulatory changes, because the law change frequently, is also a challenge for our clients. We can also speak about application process, which can be complex and may require significant administrative effort. And the last one I have in mind is project timing and planning.
Perfect. There are quite a few challenges, I would say, and but there are also ways, I suppose, to make sure that when applying, companies can apply in an effective way. And I think, Julie, you already mentioned some before. Davide, do you have other tips?
Yeah, sure. To streamline all this process, so what the company should do. At first, as Julie was mentioning, a preliminary analysis is needed in order to identify which kind of digital transformation can really boost the activity of the company. This needs to be a project with a high impact on the company business, and the company needs to look at the different projects serving, for example, different business lines, planning, finance, customers, and find out something transformative enough to meet the criteria set in the law. Then the company needs to take care about the application, to be prepared to get the ministry approval. And of course, there are specific deadlines to respect for filing those applications. Don't miss them. And the first important element to consider in that respect is that the investment and expenses to be considered for the tax credit only count as from the date the first application is filed with the ministry, meaning that the investment and expenses incurred before that date are excluded from this new regime. You know, we are assisting companies in all these steps in order to ensure these criteria are met. appropriate description of the project is provided, as well as the relevant figures, the compliance that Julie was mentioning before, and also that all these deadlines are respected.
So respect the deadlines.
Great. So indeed, quite a lot of challenges, but also ways to face them and to overcome them. Indeed. Thanks, Carla. So looking at that as well, and maybe lessons learned from all the companies that you managed to discuss too on this topic on ITC. Maybe do you have any early feedbacks or results to share with our audience from these companies that have already taken advantage of this regime or are in the process of filing an ITC?
Yes, so we have some insights in that respect, and we are pleased to share with our audience today. 2024, was the first year when this new regime was implemented, and the ministry took a while to review the applications filed by the companies. Specific technical questions from the ministry were raised to understand the different projects, and most of the answers have been provided, let's say, in the last 2 months of the year. In respect to the success ratio in getting the approval, I can share with you what I know from what are the filings that PwC has been assisting with, which anyway represents around 50% of the entire filings that have been done in Luxembourg. And all of them were positive, so all of them have been accepted by the ministry. We expect the process should run smoothly in 2025, which is the second year. But we also expect that the ministry will continue to focus in having a very good understanding of the project before giving the approvals.
Great. So quite a nice success rate on our side, at least from the companies that we helped.
Yes. Julie, do you want to add anything?
No, I think Davide said everything. Maybe one thing we could explain the reason of this success for PwC is because we have binôme of experts, advisory and tax, which I think is the key to be sure that we have a successful project.
That's a very good point. So we are coming to an end to our episode, and as usual, we want to ask you what key takeaways or advice you'd like to share with our listeners that for them to keep in mind.
Yeah, there are a few takeaways, according to me, that the audience needs to be aware of and keep in mind. The first one is time is money.
And this is the real conclusion that you need to keep in mind. Time is money.
And this is because investment and expenses to be considered for the tax credit only count as from the date from which the first application is filed with the ministry. The second takeaway is that it gives 18% tax credit computed on the entire project budget. So investment in fixed asset, patents, and also all the related expenses that Julie was mentioning before. The third one is that the project needs to be respecting the criteria set by the tax law. So it's really crucial that the project is designed considering this in order to benefit from the tax credit. So the preliminary assessment that we were mentioning before of all this digital transformation is very important in order to combine different projects in order to meet the criteria, to really get to a really transformative project. And if you give me a few more seconds, let me say that PwC can help the Luxembourg companies to analyze their digital project pipeline, try to maximize their tax credit, assisting with the preparation of the documents for the ministry, and to reply to their questions, as well all the tax compliance, tax accounting aspects which cascade from the approval of the tax credit.
Great. Julie, do you have anything to add to that?
Okay, Davide said everything. Yes. So now our audience has everything in their hand to invest properly.
Yes, indeed.
Thank you, Odell.
Thank you for joining us today. It was really a pleasure having you on our podcast. So this is TechTalk.
Technology made simple over a cup of coffee.
Well done, Christopher. On that note, what's your favorite beverage?
It's not the correct moment during the day, but I'm Belgium, so I would say beer, of course.
And I'm telling you, espresso.
Great.
And a little cup of wine.
Okay, like a true Italian. Perfect. Thank you very much.
Thank you.
And that's all for today. This is Tech Talk, technology made simple over a cup of coffee. Don't miss out on any future episodes by hitting subscribe. Thank you for listening to this episode and see you in the next one.